Get ready for the beginning of the end. Hey guys, how's it going? And thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't. Don't forget to subscribe. So let's get started. So let's get right into it real quick, guys, because the market's going down real quick. It's been nuts the past couple days. So I'll show you the major indices that well, everything's being affected, but let's look at the major ones. Starting off with the Dow Jones. We can see they have been down Wednesday over 3%, 800 points, and over 2% today, over 500 points. Also looking at the S&P 500 on Wednesday, over 3% and 2% today. And with the tech stocks of NASDAQ, they got hit the worst on Wednesday, 4%, and today 1.25%. So long story short, stocks are down a lot. No one really knows why. How long is this going to continue? And should you buy or sell? We're going to answer those questions now. So first, let's stop and evaluate and actually think about what's going on. Deep breaths. So if you noticed your portfolio was down, that's because basically everyone's portfolio is down. I'll show you a bunch of stocks that are down, but there are also ones that have went up, interestingly enough. So we have to look at both sides as well. Starting off with a couple of the main ones that we all know is Apple. They're down. Amazon is down. Visa, we got hit. We got Nike, which is something I might be interested in looking into, actually. Also Netflix, they were a high flyer in the beginning of the year. They've been getting hit. One healthcare stock, CVS, they just got approved for a merger, but they got destroyed today. And some things on the upside, interestingly enough, Facebook got hit with an upgrade, so they're up a little bit instead of down. Also, Alibaba, they actually increased toward the end of the trading day. We're going to talk about that. And I'm going to show you another example in just a few minutes where a bull market is happening, because there's always a bull market somewhere. We just got to find it. So stocks have been getting hit multiple days in a row for like a week now, guys. And the main tipping point was basically focused on interest rates. Now, the Fed has been raising interest rates for a couple of years now, and we know this, and they've been talking about that they're going to continue to raise rates because we've been at like bottom low interest rates for years now, since 2008. Now, it seems like people are finally starting to fear that for a couple different reasons. So that increases with debt and everything, especially with increasing interest rates, debt becomes more expensive. So if you have debt, if companies have debt, that's bad for them. With increasing interest rates could also lead to a slower growing economy. So that's what people are fearing as well. And that was kind of the main tipping point on Wednesday. Main focus was interest rates. Of course, the trade war is still going on. But definitely interest rates are the main focus, with the Fed raising them. Now, of course, Trump had to talk again, whether you like him or not. That's up to you. I'm not going into that. But he did talk that he believes that the Fed is crazy for raising interest rates so quickly. Now, whether that's the case or not, I believe he shouldn't have said anything related to the Fed, because I was watching a bunch of different videos and everything on CNN. Jim Cramer was talking a lot about it. Basically, everyone's talking about this. But since Trump stated that the Fed is raising rates way too quickly, and if the Fed actually turns around and says something about that, or actually reverses their original plan, then it would kind of seem like they are doing something differently just to follow Donald Trump, basically. And that destroys the reputation of the Fed. Now, aside from that, there are issues and concerns to look at, of course. However, today, for Thursday, there was really no huge new news to make the markets drop even further. I think it's really based on just pure panic and fear, because selling creates more selling. If you remember back to earlier this year in February, there was a correction in the market. The overall market was down 10%. And then it rebounded afterwards. So just due to the fact that there's really no huge major news on causing markets to go down even well, not quicker, but they're still going down significantly, I think it's really just based on fear and panic. Kind of similar to the correction earlier this year. So I think this is going to be short-lived. No one knows what's going to happen, of course. It can go lower. And for tomorrow, it could definitely possibly do that. We're going to go into what's going on tomorrow, Friday. But a lot of people are assuming that this is going to blow over maybe in like a week or so, definitely by the end of the month. So there might be a bottom and it could start rebounding. So we have to realize the worst players right now have been the tech stocks. They have been growing very nicely this year, and with that huge growth, like I usually say, if something could go up quickly, it could go down just as quickly as we're seeing right now. So you could see that these growth stocks are actually underperforming when you look at dividend stocks, value plays. Normally, in a growing economy, growth stocks destroy dividend players, when right now, iffy territory, cautious environment, dividend stocks are outperforming growth stocks just because they have the cash flow behind them, and whether it's a down market, a flat market, or an up market, you still get those dividends, so that's why they are still attractive. They're still down, but not as much. So yes, I do believe this could be a buying opportunity. However, not necessarily right now, because other things could still occur. So I'm kind of in the boat of being patient to see what happens. I was doing the same during the correction earlier this year. I bought during that dip and then it rebounded, so I made some money there. We're planning on doing the same thing now. By the way, you could see after hours from the stocks that I've showed you, and I'm going to show you a couple more. But after hours, stocks are actually up a significant amount. Now that could change at any point, either when the market opens. There are some earnings coming out tomorrow, which we're going to go into in just a minute. But if things look better tomorrow, it could continue on that green path, or if not, it could simply go back in the red. And you can see that anything could happen. You know, there might be slight hints of movement back up, but then more bad news or more panic comes in, and then it goes right back down. So going back to Alibaba, because they are up for the day, there are talks or plans that President Trump is going to talk to the Chinese president in the meeting or conference G20, I believe it's called, in November for next month. So talking is definitely better than no talking, right guys? So whether this is going to help or hurt the situation we're in now, at least something is happening, so that's something good to look forward to. So this is helping not only Alibaba, but basically all of the Chinese internet stocks. Now, before I did tell you there was a bull market out there somewhere, and there was interesting moves in gold. You could see this is definitely a popular one of ticker symbol, actually gold, but they are up almost 10% just today alone. This is because when there is fear in the market, gold is usually the safe haven place to go, and you could definitely see it right now, especially in bear markets. You could see basically in any crash, gold does very well. So what's happening tomorrow for Friday? If you want to be patient, keep your eyes open to see what happens. That's going to be my strategy. But for tomorrow, earnings are starting to occur. So with this pullback, this sell-off, earnings could do one of two things. It could either help and start rebounding this, so this might be the bottom, or it could be worse. It really depends. But what I'm going to look out for tomorrow, JP Morgan Chase has their earnings. One of, if not the largest bank in the world, is talking. So I think you should listen to them. So they're going to have their conference call. I'm going to listen to them. And there are so many different aspects to look at. One could be what they did last quarter. So they might have done good. And if so, that's great and all. However, there's also that other factor of their forecast. What's going to happen to their future? So there are definitely multiple aspects to look at. I would definitely recommend listening to their conference call. If you haven't listened to any conference calls, I would highly recommend that, because it's kind of investing blindly. It's good to understand what, you're investing in a company. You kind of hear what they have to say. So that's kind of the main part for tomorrow. Whether these companies or in JP Morgan beats estimates, that could trigger a rebound. And of course, for next week, there are a bunch more other companies reporting their earnings. So definitely keep an eye out. That's why I want to be patient, because this could trigger something. So in my opinion, I think this is definitely the time to start looking what stocks you want to get into, because this is a sale. So let's say stocks are down now. If earnings come out, it could bring certain stocks even lower, which could be even considered undervalue, at least for this type of situation where the market is right now. Because if you get hit once right now and twice after earnings, that's even lower. So me personally, I want to start loading up on dividend stocks. This is going to be my cautious play. I had a bunch of other videos talking about, a possible crash going on. A lot of people are expecting it in the near future, how to handle it, specific examples and all that stuff. So a way to diversify is to get dividend stocks, because like I said before, no matter where the market is, up, down, or sideways, you're still getting those dividends. Now with the Fed raising these rates, and they are only like 1/4 percentage point each time, so if it raises it 4 times, it might be seen as like a lot, but that's 1%. We've been at 0 since 08, and we do have to increase our rates. So I think for right now, that's why I don't think it's a huge problem. However, for the long term, well, not long, maybe like medium term, let's say, but within like the next couple years, it could be concerning, because like I kind of mentioned before, with increasing interest rates, that makes debt more expensive. So if a company has a lot of debt, they're going to be putting a lot more money toward that debt, and that could start eating into their cash flow, their profits, and their numbers. That's why I foresee a possible issue in the medium term. So that's why I want to start preparing now, get into some dividend stocks. This is a time when stocks are down, so this is when you could go shopping. This is also an example of why you should have cash on the sidelines. So when something like this happens, you have that cash available to actually buy stocks that you want to buy. So kind of reevaluate where you are, actually think of what's going on. Just don't sell because other people are selling. If you sold yesterday or today, we need to look a little bit deeper into things, because usually when everyone sells, that's usually the worst time to sell. It's kind of like reverse psychology. You kind of have to do the exact opposite of what everything your mind is telling you. So sit still. If you're a long-term investor, this shouldn't be a problem. Like your retirement account, you shouldn't even care about your retirement account because that's for retirement. That's nowhere near now. If you're a trader in the near term, there might be some issues. But for me personally, I'm a long-term investor. I feel like this is kind of just like a stop sign. You come to the stop sign, you actually stop, which most people don't do. Then you reevaluate what's going on, and then you continue to move forward. So, what do you guys think? I had to put this video out because this market is getting destroyed. Anything could happen in the next couple days or week or so. So, we all have to calm down and find out what's going on. Watch like a funny or motivational video to get your mind off of it. That's just how it is. So if you guys have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. Definitely check out the conference call for JP Morgan Chase to see what they have to say. They're the biggest bank out there. We should probably listen to them. You could just go to their website and check out conference call. Look around, you'll find it. So thanks so much for watching, guys. Don't forget to subscribe. Try to stay strong, and I'll see you in the next one.